The crypto market crashes because Binance is being sued by the SEC. Now, what will follow? But on the other side of the coin, Coinbase is bringing on more institutional clients through new products. So in this episode, you'll find out a lot more of what's happening in the markets. So let's dive into it right away because we do have a lot to cover here. Now, the first thing I want to start with, as usual, is the trading strategy that we do have. The markets are going extremely well, a lot higher, because the tech sector is now bringing the market higher for various reasons. One of the reasons is the AI boom that is continuing to happen, which is incredibly exciting to see, but more so, the job report that came out showed that we actually got a lot more job created than reported. We got 339,000 jobs reported instead of the expectation of 190,000 jobs. So it shows that signs that the economy is recovering a little bit as well. However, the Fed is saying though that they might raise the interest rates a little bit more moving forward. So until that happens, we are bullish on the market now to see how it develops. And not only that, on Sunday, the OPEC came out and said that they will slash production with 1 million barrels per day in July, while the rest of the group, they will keep their production unchanged. So we all know what that means. If there's a less supply but increasing demand, then hopefully the price should go up over time. So oil companies could be something to look into a little bit more in detail. So what does this mean for the market? Well, for our investment strategy, it has huge repercussions that I want to explain in just a moment. And we're looking to take profit on quite a few of them. But as per our investments or trades, then we have this amazing Buffalo trade that we're in with SPGI. So SPGI, we are 5% in profit. We moved the stop loss to 4%, which is great. So when we're trading, we're looking for patterns. We have 1, we have 2, we have 3 bounces. And you can see here that now it reacted from the zone and all the way down now to the bottom. And that's what we're looking for. With SHLS is another one. Trouble speaking today, it seems. But this is going down as well, which is great to see. But we were close to being stopped out with a 1% loss. So you can write that down. When you're trading, make sure you only risk 1% of your portfolio. DLTR is definitely a dollar tree for us. And currently, we have the stop loss at 5% profit, which is awesome. Moved it from 3% on the back of last week. And with MATX, there is the same here. We are looking to get this trade active. We're currently slightly in a loss. So if you look at this and you think this is a great opportunity, Dennis, you can get in at a better price than we have. And with EPC, this is a no trade. It just continued to break down and never reacted from it never triggered us in. Because that's the beauty of using a stop order. It will only trigger us in once we're in the trade. Last but by no means least, we're entering this new opportunity because we're slightly bullish on the market. So we locked in profits on the short ones, but on this one, we now want to place a long opportunity on EDR, Endeavor Group Holdings, because we do believe the market can go higher in the coming weeks. Now, be wary though. Looking at the tech market, I'm going to show you an indicator here. Looking at the tech market, US 100, this is not going very well. There we go. What you'll be able to see here is that looking at the daily even, we can see that the RSI, which shows the relative strength inside an asset, is above 70, which means it's usually overvalued. Looking here at the 1 week, you can see here as well that it's above 70 here as well. And historically, when we get these signals, then that might mark a turning point. Doesn't need to go down all this much, but could mean that we have a short-term fall in the market. That might be what could happen moving forward here. So be a little bit safer with your investments as well. And speaking about being safe with your investments, I do just want to jump into... So what we believe, by the way, is that the probable happening in the shorter term is a little bit of a fall in the market to then once again continue the journey up. But looking at Bitcoin as an example, you can see that the volatility here is insane, right? It's actually not been insane for the last couple of weeks. But we've seen the market fall a little bit here yesterday because we got news from Binance. So Binance, actually the SEC is suing Binance because they say they're mishandling billions of dollars. So, oh boy, oh boy, oh boy. Xiaopeng, he is definitely in the heat at the moment here. I mean, let's see how this develops, but they're such an integral part of the crypto ecosystem here as well. But that's really what's happening in the crypto space there that is maybe not that too positive. So what we'll think will happen in the shorter term is that we might now go down a little bit further, maybe something like this here. And then I think we're going to continue the journey to the upside together with the stock market. So they usually go a little bit hand in hand. But there's nothing strange to have these pullbacks moving down as well. So why do we think this? Well, there's a couple of reasons. There's a couple of hits that's been hitting the crypto market the last couple of weeks here now. So this very weekend, we had a video on YouTube for this, but Atomic Wallet got hacked. Atomic Wallet is one of the biggest wallets out there, and 1%, they reported that 1% of their clients' holdings has been stolen, unfortunately. So we feel with you if you have been in that situation as well. And but all we can do is to move our money to a safer place. So both with Binance and Atomic Wallet, we don't know, right? But we are moving our money too. As usual, the action is to move it to a hardware wallet such as a ledger. Better to be safe than to be sorry. So another thing I do want to mention is Coinbase. We've entered that as a VCA, but they are actually onboarding more and more institutions. So they are now unveiling a Bitcoin and Ethereum product that institutional clients can easily access. So this is now gonna commerce trading from the 5th of June. So actually yesterday. So this means that this is a significant step in the right direction. So if you look into good crypto exchanges to use, well, Binance or Coinbase, even Kraken, both regulated, but might be some of them. So that's something we're looking into at the moment. So the other piece of news I do want to share to you, so the two big, right, is Atomic Wallet and Binance and Coinbase as well. But one thing I want to share with you, because there's not much to do, right? Look over your positions, because we believe what's happening with Atomic Wallet and Binance gives us great opportunities in the market. So there's a couple of opportunities that I'm looking at the moment. So one of them is Theta. They actually locked a new patent at the moment, and being down 95% from its high, it's a great opportunity, we believe. So this is a great one to get into right now, we believe, with a small cap strategy if you're not in this. The other two is AWAX is one of them. AWAX is quite interesting. They're actually exploding in popularity. They've just actually, they are now have 1 million active users, and that's climbing rapidly. And this is a layer 1 blockchain, so a competitor to Ethereum as an example. But really, really cool, and they have this really revolutionary no-code platform. I'm not going to bore you with that, but we think this is a great opportunity to be looking at as well. And the last opportunity is the Fetch. So FET is the ticker, but Fetch.ai, down 61% from its high. Now, the reason we're looking at this is because it's they kind of use... They have a computer system that helps their algorithms to work together with various different AI projects, which is really, really cool. So they use AI and machine learning to allow all of their systems to talk to each other and other parties as well, which is learning by itself, which is both scary but also quite cool, which is why we saw this huge explosion here in the beginning of the year. So we believe this is a great opportunity to be looking at also. So last but by no means least, what is happening? Well, for the moment, if we look at companies such as Amazon and some of these other ones, we can see that they have really been going up. Microsoft, another example, really been going up close to an all-time high. Because we've seen this boom now in AI and technology. And I think we might have a cool-off period here as well, which is why we're moving our stop loss on some of these. So with Salesforce, we have the stop loss at 25% profit. With MCO, we have in Moody's Corporation at 15%. We're moving the stop loss on Amazon as well to plus 30%. On Microsoft, we're moving it to 30% as well. On AQT, we're moving it to 15% as well. And then lastly, on Tesla, we're moving it to 25%. How cool is this, right? We're moving this. So the one thing I want to look at, so basically we're avoiding tech a little bit at the moment because, they're at all-time highs. But we do have some other ones here. This is a small cap, not really a VCA, but a small cap project here, because this is C3AI, an AI opportunity that we are looking at. So currently we actually have, I don't know if you remember this, we talked about this in Trades of the Week. And essentially, we looked at it over here. It moved down a massive 50%, went up 100% or so. It's currently down 20%. So I'm going to be looking at adding to my position here when this baby is down roughly minus 50% or so. So this is what we are looking at. So I would keep this in my watch list for now. And there's no rush to get into these. I'm not kind of acting on my emotions here. I'm waiting for this to come down, which will give us a great point to enter. So that's what we're looking at. So as per our results, it's unchanged at the moment. And but we have locked in profits on Buffalo and on VCA, and we're looking forward for the bull markets about to come in CCA and small cap. Now, just remember this, that when we're looking at the bull market, I want to remind you that we are in the cycle. It's 1 year to the halvening, less than 1 year, and we believe the bull market can start anytime from now, until the end of this year or the halvening, and we believe the lows are in for the market. So go over your portfolio. We're building our positions because, like Warren Buffett said, the money is not made in the bull market. The money is made in the bear market when you get into your positions and when you average down so you can make the money and kind of get the fruit from all your seeds then when we get into the bull market.